UK house prices in free fall. That's what the headlines are shouting at us from every newsstand and website. If you've picked up a newspaper or scrolled through your phone lately, you've probably seen bold, alarming words splashed across the front pages. The media's buzzing with talk of a housing market meltdown, and it's hard not to feel a sense of panic. Biggest drop in a decade, they say, with graphs showing sharp downward lines and financial experts warning of tough times ahead. It's enough to make any homeowner or potential buyer feel anxious about what's coming next. Is your home's value about to plummet? Are you at risk of losing thousands, or even tens of thousands of pounds? The headlines are everywhere, and the anxiety is real. People are calling their estate agents, checking their property values online, and wondering if now is the time to sell, buy, or just wait it out. But let's take a step back. Are we truly on the edge of disaster, or is this just another case of media hype blowing things out of proportion? It's easy to get swept up in the drama, but the reality is often more complex than the headlines suggest. The UK housing market is indeed at a crossroads. After years of relentless growth, with prices climbing higher and higher, we're now seeing a shift. But what does that shift really mean for you, your family, and your financial future? Yes, prices are falling. But is this a dramatic crash or simply a much-needed cooling-off period after an overheated market? Are we witnessing a correction that could actually be healthy in the long run? Or is there genuine cause for alarm? To really understand what's happening, we need to look past the panic and dig into the facts. That means examining the data, listening to experts, and considering the bigger picture, not just the scariest headlines. Remember, this isn't just about numbers on a spreadsheet. It's about your home, your future, and your financial security. For many, a house is the biggest investment they'll ever make, and these changes can feel deeply personal. So, is property still the safe investment it once was, or are we seeing a generational shift in how people view homeownership and real estate? With rising interest rates, changing demographics, and new government policies, the landscape's evolving. Let's cut through the noise together. We'll break down the data, look at what's really driving these changes, and help you understand what it all means for you, whether you're a homeowner, a first-time buyer, or just curious about the market. My goal is simple: to give you the real story, free from hype and fear, so you can make informed decisions about your home and your future. So, let's get started and find out what's really happening in the UK housing market right now. Why all the worry? It's a perfect storm. The cost of living crisis, soaring interest rates, and sky-high house prices. Everyday expenses are up, making it harder to save or afford a mortgage. Interest rates have jumped, pushing monthly payments higher for new and existing borrowers. And house prices are so high, they're out of reach for many. When buyers can't afford homes, prices face downward pressure. This triple threat has everyone, from homeowners to first-time buyers, on edge. The big question: can prices stay this high when people can't pay? Let's take a closer look at the current state of the UK housing market by diving into the latest data and trends shaping the landscape today. The property market has always been a hot topic in the UK, and right now, it's going through a period of significant change and uncertainty. As of late 2025, UK house prices have fallen by about 3 to 5% from their recent peak levels. This decline is notable, especially for homeowners and investors who have grown accustomed to years of steady growth. However, it's important to put this drop into perspective. The current dip comes after a dramatic surge during the pandemic, when house prices soared by more than 20% in just a couple of years. That boom was driven by factors like low interest rates, a rush for more space, and government incentives. So, while prices are down from their peak, they're still much higher than they were just a few years ago. What we're seeing now is a partial deflation, a cooling off, rather than a full-blown crash. The market is adjusting, not collapsing. There's less panic selling and more of a wait-and-see approach from both buyers and sellers. Mortgage approvals and property transactions have dropped significantly. Many potential buyers are hesitant, worried about rising interest rates and economic uncertainty. Sellers, on the other hand, are reluctant to lower their prices, hoping for a rebound. This has led to a quieter market overall, with fewer homes changing hands and a kind of standoff between buyers and sellers. Open houses are less crowded, and estate agents report slower business. It's also crucial to remember that the UK housing market isn't a single uniform entity. London and the southeast, for example, have been hit harder by price drops, reflecting their higher starting prices and greater volatility. Meanwhile, some regions, particularly in the north and parts of Scotland, are showing surprising resilience, with small price increases in certain local markets. These areas are benefiting from more affordable prices and steady demand. National averages can be misleading. The reality is that your local market may look very different from the headlines. Some neighborhoods are holding steady, while others are seeing sharper declines or even modest gains. The overall story is one of definite cooling, a slowdown in activity and price growth, but not a dramatic collapse. The market is in a period of adjustment, searching for a new balance between supply and demand. So, while headlines may suggest turmoil, they rarely capture the full complexity of what's happening on the ground. To truly understand the UK housing market today, it's essential to look beyond the averages and consider the local factors at play. Are we heading for a crash like the 1990s or 2008? Back then, prices fell around 20%, a brutal drop caused by sky-high interest rates or a banking meltdown. Today's 3 to 5% fall is minor by comparison. The difference: interest rates are high, but not extreme, and banks are stronger. Unemployment is still low, so forced sales are rare. Past crashes needed a severe trigger. So far, we don't have one. The current market is struggling, but it's not a repeat of past disasters. For a true crash, we'd need a much bigger shock. More price falls are likely, but a catastrophic collapse isn't the most probable outcome. Context matters. House prices in the headlines are nominal, but real value means adjusting for inflation. If your house price drops 4% but inflation is 6%, you've lost about 10% in real terms. This silent crash erodes wealth even if prices look stable. For homeowners, it's a slow loss. For first-time buyers, it's a gradual improvement in affordability. After past peaks, it took over a decade for real values to recover. Today, a small nominal drop hides a much bigger real terms correction. Economists see this as a correction, not a crash. The adjustment is already happening. The process is gradual, but the impact is real. Don't be fooled by flat prices. Real value is slipping. The biggest pressure now? Mortgage costs. Ultra-low rates are gone. The Bank of England's base rate is over 5% and mortgages have followed. A $200,000 loan now costs hundreds more per month than it did just a few years ago. Buyers can't borrow as much, so prices face downward pressure. Banks are stricter, making it harder for buyers with small deposits. Existing homeowners coming off cheap deals face payment shocks. Some will see their payments double. Millions will be hit as fixed-rate deals expire. This squeeze reduces spending and can force sales, adding supply to a falling market. The affordability crunch is real and ongoing. It's a fundamental shift in what buyers can pay. Not everyone is hit by rising rates. About a third of UK homes are owned outright. No mortgage, no payment shock. These owners, often older and retired, provide stability. They're not forced sellers. Many others are on long-term fixed rates, insulated for now. This staggers the impact, preventing a sudden market collapse. The result, a divided market. Some feel the pain, others don't. This buffer helps prevent a wave of forced sales. The pain isn't shared equally, but it keeps the market from freefall. Government schemes like Help to Buy aim to help first-time buyers, but often just pushed prices higher. By boosting demand without increasing supply, these schemes inflated new build prices. Developers benefited most, while affordability barely improved. Now Help to Buy is gone, and new build prices are adjusting down. The lesson: boosting demand without fixing supply just makes homes more expensive. Government help can backfire if it doesn't address the real problem. Real change means building more homes, not just offering more loans. The question on everyone's mind: will the UK housing market crash, or are we in for a softer landing? With so much uncertainty in the air, it's no wonder that buyers, sellers, and homeowners alike are anxiously watching every headline and market update. The stakes are high, and the memories of past crises still linger. Looking back, the UK has experienced some truly dramatic housing downturns. The catastrophic collapses of the 1990s and the 2008 financial crisis left deep scars, with plummeting prices and widespread financial pain. But today, experts agree that a repeat of those events is unlikely, unless the economy faces a much larger, unexpected shock. Instead of a sudden crash, What we're witnessing now is a slow, grinding correction. House prices are edging down, but not in free fall. The real story is a gradual adjustment, with modest nominal price falls and a more significant drop when you factor in inflation. It's a process that's unfolding over months and years, not days. Most major forecasts suggest that from the market's peak, we'll see a total fall of around 10%, and it's important to note that much of this decline has already taken place. The worst may be behind us, but the market isn't bouncing back quickly either. Inflation is playing a crucial role here. As prices for goods and services rise, the real value of homes is quietly eroding. This means that, even if house prices don't fall dramatically in cash terms, they're becoming more affordable in real terms over time. A slow, invisible shift that's easy to overlook. What's keeping the market from collapsing? A large number of outright homeowners, people who own their homes without a mortgage, provide stability. Add to that the UK's relatively low unemployment rate, and you have a market that's more resilient than it might appear at first glance. For current homeowners, this means you shouldn't expect your property's value to soar anytime soon. In fact, stagnant or gently falling values are likely. For buyers, the picture is still tough. Affordability remains a major challenge, with high mortgage rates and strict lending criteria making it hard to get on the ladder. The era of easy, double-digit annual gains is over. Now, it's more like a slow walk downhill, a steady, manageable decline rather than a dramatic cliff edge drop. The market is adjusting, not collapsing. Today's housing market is more balanced, but also more challenging and realistic. Buyers and sellers must navigate a landscape shaped by both risk and resilience, with no easy answers or quick fixes. So, behind the dramatic headlines, the real story is one of gradual change, cautious optimism, and a market finding its new normal.